Okay, hi everyone. Can hear me? Yes, and can see the screen as well. Yeah. Okay. So we'll wait for like 2-3 minutes till the others come. If your friends are not here, can you just give them a call or do something and then remind them to come? So this is the second class for unit number 5, right? Last Sunday we did the MCQs from 2011 all the way to 2017. So today what we'll do is we'll start from 2018, we'll do 19 and 20, and then we'll move into the essay questions also, right? So that is the plan for today. So hope you all got the news that A levels is postponed. Do you all like it? Yes, no? What do you all think about it? Good, bad, love it? I know. Personally, I felt it was a little bad that now that you all have to kind of study. So it's officially, yes, it was there on the official websites of Derana and all of that also. So it is postponed, but we don't know until when. They've not told a date, but officially it's postponed. It will not happen in August. So I don't think they will drag it all the way to December. But if they drag it all the way to December, that is also kind of bad, right? So I think maybe 1 month or 2 months is good, but more than that, I think it's kind of bad because you all also will, lose your momentum somewhere around. I'm saying October maximum, I think, is a good month for you all to do because you all have missed a little bit in school and all of that. So I think October, September, October maximum. Maybe if it goes to somewhere around December, I think that's dragging too much. And what will happen is you all are going to forget. O levels in August. I don't think they'll have O levels in August also because even O levels they have not covered the syllabus. So O level they at least have until December to cover the syllabus, and if they're bringing it forward, there is no way that could happen, right? So the good number is I think exactly, but I also felt August would be the ideal thing, so you all can finish it off and then be free. But now there's nothing that we can do. So, but now it's in I think I'm assuming it will be somewhere around in October, right? Because I think just postponing 1 month is not going to make a big difference. So I think even last time, because it was in last time also, since it was in what October. So I think this year also they might have it in October, not September. That is what I feel, but I don't know. So we'll see until when they officially tell it. So ideally within 1 or 2 weeks, they might give us the exact month when it is supposed to happen. So I it will happen. I don't think it will get postponed again because now that the vaccine is out and everything, I don't think it will get worse. Right, the situation won't get worse. It will only get better. So ideally, yes, that is the thing. So what I did is now, but the good point is that now I have a fast track program starting in April, that is the next month. So I have made some changes to that and I've added more paper practice into it, right? So usually in the fast track, what I do is like a 4 to 5 month program, but now I can extend 1 more month. So what I was planning to do is I was planning to do around 4 extra papers. So that would give you all much more practice. So I have kind of planned it out. I'll let you all know what the exact plan is for the fast track and all of it. It will start in April, right? So April, ideally for around 5-6 months. So that is there to kind of brush up all these units. So we will not be doing the basics in the fast track, right? It's about more advanced. We try to do the most toughest questions from each areas, right? And we look at the most repeated questions and the most toughest questions so that you all can face. There's no point doing the easy questions over and over and over again, right? So that will be a different kind of program and that will be really helpful. So ideally towards the end of the fast track you all will do roughly around at least 10 mock exams, right? So I think that is way more than enough to for you all to probably get your A in A levels, right? So I've planned it out properly. If you all properly follow what I say, I'll give you all a study plan also on these days, what and what you all need to do for econ, right? So you all will get a study plan. You all will get, the papers also. It will be like one big book, right? For every month, it will not be small papers all around because those tend to get lost. So every month you will get one big book with the lessons, papers, and questions and everything. It will start in April. So we'll start in April and we'll go for around April, May, June, July. So now since August is also not there, maybe August and September also, right? So that will be 2 days a week. I've not finalized the dates yet, but ideally one day will be Saturday night. That is our normal revision class day. The other day I have not finalized. That I will look into it and finalize it very, very soon. But anyway, there are also the recordings will be provided, so you can access that anytime until A levels, right? Even if you miss a class, do anything, right? All of that will be there. So we'll plan that out properly. I'll plan that out properly by the end of this month and let you all know what the plan is for revision class students, right? Remember, you all have a exam, right, at the end of this month. I am not going to make that exam very, very hard. I'll keep it at A level standard, or maybe, yeah, somewhere around A level standard, right? So it will not be a hard paper. Don't worry too much, the revision class students, because this month we'll be ending the revision class, right? So we're in unit number 10. We'll finish 11 and 12, and ideally we'll have the exam. So start studying, right? You all have your school exams also. No? So along with that, study for this as well, right? And we'll see what we can do, right? So in the meantime, beyond the classroom, I ideally wanted to finish by the end of March, but I will not finish it. We'll do it slowly now that A levels is postponed also. So we'll go at the same pace that we were going, right? We'll do it bit by bit, and maybe I think another 2-3 months we should be able to finish all these past papers also. So 2011 all the way to 2020. If we have finished all the past papers, that is also a kind of gives you a lot of confidence, right? So that is what we are planning to do for now. Any questions before we start? Yes, no? Anyone? Anything? Questions? No? Okay, so guys, and also one more thing I'll just tell you all, right? Just because A levels is, kind of postponed, let's say by 1 month or something, right? Don't be stupid enough to take a break, right? Don't be that person, because you need to make use of this opportunity, not, chill and, go 1 month late, right? So ideally what I want you all to do is keep doing whatever that you have been doing, right? You get 1 more month, so that month you could ideally use it to, brush up your things once again. Because trust me, if you decide to take a break, you lose your momentum. If you lose your momentum, it's very, very hard to get back. Trust me, right? Now personally, me, right, during A levels I've been studying really, really hard. I know how to get it done, but now after I've joined uni and, all of it, since this corona and all of that exams been postponed, right, now I can't sit in one place and kind of, study, right? So I can't do that because I've lost my momentum. It's very hard to, regain it back, right? To sit and study. So you all already have some sort of momentum. So don't take a break, right? You take a break, everything is gone. Okay. So keep doing your day-to-day normal thing. And we should be okay, right? Uh okay. Question, what about the question papers we did earlier for unit 1? Okay, these questions, right? I didn't really have time to finalize because some I had to change a lot of answers, a lot of questions were repeated, so I had to do that. That is why I kind of paused that, the questions that you all made. I have unit number 1 and unit number 2 questions that you all made, but now since a lot of people have kind of left, that is why I'm wondering whether we can continue that or not, because now not everyone comes, right? Although we have around 200 to 300 in the groups, in the two groups, not everyone comes for class. So whether we are able to get their contribution and get questions made and all of it, that is again a problem. And also when you all make it like, uh for a I'll what I'll do is I'll finalize the unit 2 papers and send it as when I find some time. I don't think I'll be able to send it very, very soon, right? Because there's a lot of editing and a lot of things that needs to be done, because some questions are wrong, some answers are wrong, some there are no answers also, right? So I need to sit and find time to kind of do that, because right now my focus is on working on your revision class mock exams, right? Making those. So ideally, we'll somehow do that. Don't worry. Before you do A-levels, we'll somehow get that done. But mainly make sure you stick to your past papers. As long as you can do your past papers well, I think that's fine, right? So we'll start with 2018, right? Guys, have you all done the MCQs? Yes. 2018 onwards, at least until 2020, 18, 19, 20. Yeah. Okay. Perfect. So we'll discuss these questions. There were a few interesting questions that I saw, I think, in the 2020 paper, right? The others were kind of normal questions. Okay. Right. So 2018 question number 21. Okay. For an economy consisting of households and business firms only, right? Which of the following is consistent with the circular flow of income? So what do you all think the answer is? These are simple economy, just households and business firms. Which of the following, guys, when they say which of the following is consistent, in other words, they're asking you what is the correct statement, right? So from these five, which is the correct one? Okay. So shall we go through the answers? Number one. Number one says households are producers of goods and services. Do households produce goods and services? No, right? It's the businesses who produce. Oops. Give me a second. It's the businesses who produce goods and services. So first one is cut off, right? So it can't be the first one because first one says households produce goods and services. So it says that can't be that. So therefore it's wrong. Second one says households are users of productive resources. Who uses the production factors? Production factors are used by businesses, right? It's the firms who use the productive factors. Firms use the productive factors and produce goods. So houses are users of productive factors, even that is wrong, right? So you can eliminate that answer. Number three says households are suppliers of productive resources. Okay, that looks right. They supply productive resources, land, labor, capital, and firms are producers of goods and services. So that looks right, right? So that should be the answer. We look at the other two answers also. Firms are collectors of tax. No, who collects tax? Collectors of tax. Who are the collectors of tax? It's the government who collects tax, right? So firms don't collect taxes. So that answer is gone again. Number five says business firms are suppliers of productive resources. Business firms don't supply the land labor capital. No, it's the households who supply the land labor capital. So there also that part is wrong. So those highlighted areas are wrong in each of these. So the correct answer is number three. That was a kind of easy question. If you simply know what the circular flow of income is, right? Done with that. Moving on to question 22. Okay. So 22, again, they're asking you the definition for GDP. So which of the following statements define the gross domestic product? Okay, what do you think the answer is? The total quantity of output produced by an economy at a given time period, total market value of all output produced by an economy in a given time period, the total market value of all final goods and services produced by an economy in a given time period, a total value of all final goods and services sold in the domestic market in a given time period, the total market value of final goods and services produced by an economy minus the market value of final goods and services exported to other country. Da, da, da. Okay, so what is the answer here, right? First one says total quantity of output produced by an economy in a given time period. Remember, when we're talking about GDP, it's not just the output. We're talking about the value. Output is just the number of units you have produced. GDP is the number of units multiplied by the price of that unit. You get the value actually. So it's not number one because it talks about an output, right? Here, number two says the total market value of all output. Is it all output? How do we correct that? How can we correct number two? It's not all the goods, it's only the final goods and services. Remember? Now, for example, sugar can be produced by one person, and then that sugar can be used by another person to produce chocolate. So if you take the value of chocolate and take the value of sugar both together, you're doing a double counting error because the value of sugar is already inside the chocolate, right? There's a double counting error there. So if you don't take the value of all the goods and services, You only take the value of all the final goods and services, right, produced in the country. So number 3 says total market value of all final goods and services produced by an economy in a given time period. That is the right answer. I'll show you why the others are wrong. Number 4 says total value of all final goods and services sold in the domestic market. Now, when they say sold in the domestic market, right, when you look at this, our exports, right, if you look at our exports, exports are produced in Sri Lanka, right? They're produced inside Sri Lanka. So if they're produced inside Sri Lanka, right, they, okay, produced in Sri Lanka, but sold abroad, right? They're not, exports are sold abroad. No, you don't sell exports here. No. It's made here, it's sent abroad, so it's sold somewhere else, right? So they're produced in Sri Lanka, but sold abroad. So it's sold in the foreign market. So these kind of things in our GDP, we have to include exports. No, remember GDP, we add our exports minus our imports. So exports are part of GDP because we have produced that in Sri Lanka, produced that inside our country. So the fourth one is saying the total value of all goods and services sold in the domestic market. Now this will not consider exports. Exports were actually produced in Sri Lanka, right? Produced in the country. It has to be a part in the GDP, but it was sold abroad, sold in the foreign market. So if you take into consideration only the goods and services sold in the domestic market, you are not taking into consideration the exports. So that is why that is wrong, right? And number 5 is saying the market value of all final goods and services produced by an economy, okay, minus the market value of final goods and services. You don't minus the value of final goods and services exported. You actually add the goods that is exported, because whatever that you are exporting, now if you simply see, guys, right, when you take GDP, right, under the expenditure approach, you add consumption, you add investment, you get government purchase, you get GDE, right? That is gross domestic expenditure. That is the amount of money, right, the citizens in Sri Lanka have spent, right, to consume, invest, and for government purchase. So from the amount that they spent, right, they did not spend on exports, right? So exports were produced in Sri Lanka, sent abroad. So our local people have not spent money and purchased the exports. That is why we add the exports, right? But our local people have consumed imports, right, which came from other countries. So that was, those imports were produced in another country. That can't be a part of our GDP. That is why we minus the imports. We add the exports, we minus the imports, right? Then you get GDP. So exports are added, right? You need to know the logic why exports are added. Exports are added because exports were produced inside Sri Lanka. Why is imports minus? Imports are minus because we have spent it, but imports were produced in another country. It can't be a part of Sri Lanka's GDP. So you need to remove that off. That is why we minus GDP. So that is why this one is also not the answer. You can't minus the value of the final goods and services exported. You have to add the value of final goods and services exported. Okay. So the fourth answer is saying the total value of final goods sold in the domestic market. Now. So back to this, right? Since one person had a question, right? In the domestic market, right? When you sell, right? When you sell goods in the domestic market, what is GDP? In simple terms, GDP means the value of all the final goods you have produced inside your country, right? Whatever goods that you have produced inside your country, the final goods. Now, exports are also produced inside your country. No, now let's say MAS, they're producing fabric, they're producing garments. They are produced it inside the country. But where is it sold? It is sold in, let's say, another foreign country. When they export it, whoever who buys it from them sells it in another country. So when you take the value of final goods sold in the domestic market, right, you're not taking into consideration goods like the exported goods. So that is why that is wrong there, right? So answer becomes number 3. Are we okay there, Chef? Yes. It simple meaning of GDP. You don't have to think too much. If you know what GDP is, think now. This was a question I think repeated around 2-3 times now. Okay, fine. Moving on. Okay. This one is a kind of a tricky question because this question is but it's a good one, right? What is not included in the measurement of gross national income. What do you all think? 1, 2, 3, 4, 5. Gross national income. 1. Sure. So if you look at gross national income, let's say we'll take the income approach, right? Let's say we take the income approach of calculation here. Now, when you take the income approach, right, how do you add? How do you get GDP? Can someone tell me? We take compensation of employees, right? So I'll just write short forms, guys. Compensation of employees. To that, what do we add? We add gross operating surplus, right? I'll say gross operating surplus. So you can say net operating surplus and this thing. You can say mixed income. So sometimes mixed income, you can also put it inside gross operating surplus. That's fine, right? And you also add what? Other taxes on production, right? So when you add all of this, you get gross value added, right? You all know the basic things. You get gross value added at basic price. For this, how do you convert this into GDP? Now, when you add all of this, you get gross value added at basic price. You add net to convert into GDP. You add net indirect taxes, guys. You add net indirect taxes under the income approach, right? Then you get GDP at market price. So to go from GDP at market price to GNI, right, to gross national income, now what do you add? You need to add net primary income from abroad. You add net primary income from abroad, you get GNI, right, at market price. So now this is the uh, simple calculation. Now they're asking you what is not included in the measurement of GNI. So if you look at it, right, now dividends paid to shareholders will come under, right, gross operating surplus. Profits retained by companies will also be under gross operating surplus. Rent paid to landlords, that can also come under, let's say, gross operating surplus. You can even, let's say, if it can even be mixed income also if you really want it, but let's say we'll put it under gross operating surplus, right? Property income paid to resource owners, now that also can either be in one of these three. So all of this will ideally be a part of gross operating surplus. But when you look at financial benefits paid to the unemployed, that is transfers, guys, right? That is what? Those are transfers. So those don't come under gross national income. That is, when you are later finding personal income, when you're finding personal income, then you might include this financial benefits paid to the unemployed. So those don't come under this. So I just showed you the flow and then showed you where and where these four come into. So ideally, if it is employees. So this is employees here, compensation of employee. This is the wages kind of, right? So this is for first one will not come under compensation of employees because this is a transfer. Compensation of employees means when you work in return, you're getting something. You're getting something return for what you provided as a service, right? Now your father is going and working somewhere, right? He's getting a salary of 20,000. That comes under compensation of employees. But these are financial benefits paid to the unemployed, paid to a person who is not working. This is a transfer, right? This is a one-way thing. He is not providing anything. Government is simply giving. Now, for example, like a pension payment, right? Something similar to a pension payment. This is now those kind of things does not come under GNI. Where does that come? When we calculate personal income later. When we are calculating personal income, then these unemployment benefits, let's say, any pensions that they receive, those kind of things can be included there, right? So that is the answer. Which of the following is not included in GNI? That's a good question. So, right, guys, now these questions like these, right? Now these are good questions. Now highlight it and keep, right? So in your past paper book. Don't underline in your past paper book. I've told you all, right? Don't mark answers in your past paper book because you will be using this to do the questions again and again. If you've already underlined and scribbled, then you buy a new past paper book later on, right? So please have a separate book and mark the answers, right? Don't touch your past paper book. Only thing you do in your past paper book is highlight the hard questions. Not Don't highlight the entire question, right? Please just highlight the question number, right? Take a whatever highlighter and just highlight the question number and key. That's all. Don't write anything else in your past paper book because you will be needing it later on. Okay, are we okay with that question? Yes, no? Fine. Okay. Then let's move on to the next one. This is also a very interesting one. I actually like this question. Okay, if we all have not done that, can you all think and try to do this? All those, I'm pretty sure that all 77 of you all who are there here have not done it, right? This is a very interesting question, right? It's on value added, GDP and stuff like that. So we'll go with this. They say, assume that a hypothetical economy contains only 3 industries. Industry A, using imported inputs of 30 million, produce an output sold for 100 million to industry B. Industry B, using no imports, sells part of its output to industry C for 300 million and exports goods to a foreign country for 60 million. Industry C uses 30 million of imported inputs and sells 500 million of its outputs to final consumers. They're asking what is the gross domestic product of this economy. Okay, so can you all take around 2 minutes to check this? Okay, you want to take a screenshot? Can you take a screenshot? Okay. Okay, so can you all take 2 minutes? Think of this. It's a very interesting question. Yeah. So I'll just give you a head start, right? In order to answer this, right, what you could do is you take the 3 industries, industry A, right? Industry A, industry B, and also industry C, right? You take the 3 industries and simply what you have to do is you take the gross value of output, that is what is their final output, right? From that you have to deduct their intermediate consumption, whatever inputs that they are buying, right? And then you will get the gross value added. So here there are no taxes, so the gross value added will be equal to the GDP kind of. So that is what you have to do for industry A, B, C, A, B, and C. Can you put in your answers once you have done? I'll show you as well. I'll give you a few minutes, maybe 1 minute. It's a nice question. Even question like this, just highlight it and keep. Okay. So far, I've got a very few answers, but all the answers are right. Okay. So how does this work, right? So all those who are kind of lost, listen to me very, very carefully here, right? There are 3 industries. They're saying industry A using imported inputs of 30 million. So industry A has intermediate consumption. They are buying inputs of 30 million. So intermediate consumption you have to deduct, right? And they're producing an output of 100 million. So they're producing an output of 100 million. So their gross value of output is 100 million, but they are getting 30 million worth of inputs. So how much is their gross value added? How much is the gross value added of industry A? They have a 70 million gross value added. Okay. Now this output of 100 million is sold to industry B. So industry B is using this as their input, right? So intermediate consumption for these people, there is a 100 here. Okay. So industry B using no inputs. They're not importing anything. They're only buying it from industry A. Sells part of its output to industry C. So their part of their output, they're selling to industry C for 300 and exports goods to a foreign country for 60 million. So they are making a total of 360 million worth of output. 300 they are selling to industry C, 60 they are exporting. So to make this 360, they have bought inputs from industry A. So what is their value added? 360 minus 100, you get 260 million. Okay. So if you look at industry C, they have bought this output, right? Sells part of its output to industry C, you know. So industry C is using that as inputs, right? So industry C has 300 million worth of inputs, intermediate consumption, right? And what do they do? And they also use 30 million of imported inputs. So there is 30 million of imported inputs also for this industry C, right? And they sell their final output for 500 million. So then if you look at this 500, right? Then from 500, if you minus how much? 330, you get 107. So the value added of industry C is 170. So then to get the GDP, what you have to do, you have to add all these three together. You add this, this, and this. When you add all three together, you get a GDP of how much? A GDP of 500. Guys, if you have, sometimes you would have got the answer using the final product approach, but that would ideally not work, right? That approach, as far as I feel, it will not be correct because here, right, because of this imports and exports thing, right, I think there will be a difference. Right? Okay, I'll explain this again, right? So a better approach is going with each individual industry and calculating the gross value added, because if you go in the final output method, because there can be a problem, because then there are, but according to this sum, for some reason the gross value added and the final output is the kind of the same. But since you are importing, exporting and all of it, not that one industry's input is used by another and other one is used by another, no. Here there is imports and exports also. So therefore, if you simply take the value of the final output, your GDP can be wrong. But in this example, yes, for some reason, both methods you get 500, but the correct method to do a sum like this is to get the gross value added at each of these things. Okay. So I'll explain it again to all those who did not get it. Please pay proper attention. Because I'm with the understanding that you have done the question and you all know what this unit is about and you're not completely blank. Okay. So there are three industries. Read the question properly, right? Industry A using imported inputs of 30 million. So they are buying, let's say, raw materials for 30 million and they're producing an output for 100 million. So their gross value of output is 100 million. They have bought inputs of 30 million. So their value addition is 70 million. That's industry A. So this industry A is selling this 100 million worth of output to industry B, right? So industry B is using this whatever product. So let's say this industry A is making, let's say, cloth, right? So they are taking the cloth, they had 100 million worth of cloth and they have sold it to industry B. So industry B buys that 100 million worth of cloth, right? Using no inputs, they are not importing any raw materials. They're selling a part of their output. Let's say they are making t-shirts from the cloth, right? So they are selling a part of it to industry C. So 300 of it they are selling to industry C and 60 of it they're selling abroad. So these people's output is 300 which they sell for C and 60 which they export. So they're making a total output of 360. To make that total output of 360, they have consumed 100 million worth of raw materials. So their value added is 260, right? So if you look at industry C, then industry C is already bought 300 million worth of things from industry B. In addition to that, industry C uses 30 million of imported inputs. So that is also under intermediate consumption, right? So they have, and their final output is 500 million. So 500 million gross value of output, intermediate consumption is these two. If you deduct that, you get gross value added of 170. So when you add all these gross value added, 70, 260, and 170, you get a GDP of 500. Is that fine? Yes, no? Yes, take some time and think about it if you're still kind of lost. But this is not that hard. It's not rocket science. If you know the logic behind what gross value of output, gross value added and stuff, you definitely can get this, right? So done with 24. Okay, that's it. This is, yeah, GDP at basic price, because they have not talked about any taxes or anything. So you can say this is GDP at basic price because they are not talking about taxes. So let's say there is no taxes in this economy. Okay. Then we'll go into this one. This is a nice question. Okay. 2019 all syllabus, did you all do it? Yes, no? What do you want to skip? Did not do? Did? No? Okay, few people did, so we'll do it, right? So again, an easy one, right? In the circular flow model of an economy with no government sector and no international trade, households, what they're asking you, which one is the correct statement? Households receive income from buyers of final products. Households receive income from the sale of resources in the goods market. Households pay business firms for the use of their resources. Households receive income from producers for the use of their factors of production. Households pay income to producers for the use of their savings. What do you think happens? Circular flow of income. What is the true statement regarding households there? Do they receive income from buyers of final products? No, that is firms who receive income, right? So they don't receive income, that's wrong. Receive income from the sale of resources in the goods market? No, factors of production are sold in the factor market, not the goods market. So this is also wrong. Pay business firms for the use of their resources? No, business firms only pay these people. Households don't pay business firms. That is again wrong, right? Receive income from producers for the use of their factors of production? Yes. So since households give their factors of production, since producers are using their factors of production, they receive an income from it. So that is the answer there. Pay income to producers? No, they don't pay income to producers. They receive income from producers and not for their savings, for their factors of production. Answer number 4. Okay. Okay, 2021. This is an interesting question. Question number 21. Okay. So the table below presents nominal data on the components of GDP based on the expenditure approach for a hypothetical economy, right? 1718. C, I, G, X, and M. Assume, okay, so assume that the index for the GDP deflator of this economy increased from 100 in 2017. So in 2017, the GDP deflator is 100 to 110 in 2018. What is the growth rate of real GDP in 2018? Can you all think of that? Okay, someone wanted this thing. Okay, done. Okay, right. So how do you get along this? What is the approach of using this? What do you do here? First of all, you calculate nominal GDP for both the years. So how do you calculate nominal GDP? Nominal GDP, according to the information they've given here, you can calculate nominal GDP under the expenditure approach, right? So in 2017, nominal GDP C plus I plus G plus X minus M. So C is 600, I is 200, G is 100, X is 250, minus imports 150. Can you all tell me a value for the nominal GDP? How much do we get? 1,000? Yeah. So nominal GDP is 1000 billion here, right? So in 2018, then what is the nominal GDP? I just showed the previous question, no? 2018 nominal GDP is 650 plus 300 plus 150 plus 300 minus 250. How much do we get here? Nominal GDP 650, 300, 150, all of it. How much do we get? I got 150, I got 650 also. What is the answer? 150. Okay, so 150 billion, right? X minus M. Okay, so now what are they asking? They're asking you for real GDP. Now, how do you go from nominal GDP to real GDP? Anyone? Nominal GDP. But how do you calculate real GDP? Real GDP is equal to nominal GDP. You need to divide it by the GDP deflator. You need to remove the inflationary effect, right? So you divide it by the deflator. So here, right now, in and multiplied by 100 also, right? So multiplied by 100 also, and then you get a proper value. Okay, so that multiplied by 100. Okay, so if you look at 2017, in 2017 it's easy. No? In 2017, nominal GDP is 1000 billion, GDP deflator is also 100. So that means 2017 is the base year. So in 2017, the real GDP will also be equal to how much? Real GDP is equal to 1000 billion. That will not change. You put to the equation and see, right? Because if the deflator is 100, that means that's the base year. So nominal GDP, real GDP will be equal. But in 2018, we can make this calculation. So in 2018, when we do this, right, nominal GDP in 2018, 1150 billion. GDP deflator, they have said in the question, is 110, right? And then we have the this of you multiplied by 100. Can you solve this and see how much do we get? Yeah, so the previous question after we're done with this. How much do we get here as real GDP? I've simply put these numbers into this. 2018 real GDP is 1045.45. Okay, okay. So real GDP in 2018 is 1045.45, right? But that is not the question. So in 2018, they're saying real GDP is 1045.45 billion. Now they're asking you, right, what is the growth in the rate of real GDP? So how do you find a growth in the rate of real GDP? You get the new GDP. So GDP of 2018, right? So GDP 2018, the new year, right? Remember how you all find the percentage growth? GDP 2018 minus the previous year, right? GDP of 2017, GDP of 2017, you divide it by the GDP of 20. That is how you get a percentage, and you multiply by that by 100, you get a percentage. So multiply this by 100. Can you do that calculation and tell me how much you all get? Okay, that was bad. How much do we get? What is the percentage we get? Put numbers into that. The real GDP of 2018 minus the real GDP of 2017 divided by the real GDP of 2017 into 100. We get 4.54%. So you round it off. What is the closest? So here you get 1045.45 minus 1000, right, divided by 1000 into 100. So answer there will be 5. That's the closest that you can get into 100. That's an easy calculation, but there is a lot to do. It's not at all hard. It's a very simple calculation. but there is a lot of steps that is involved. So the closest answer for this is, the answer is 4.54%. The closest one is 5% when you round it off, right? So I'll repeat the steps into do this, right? What you do here, they have given you values for 2017, 2018. First thing I did is I calculated the GDP. I calculate the 2017 GDP. I calculate 2018 GDP. C plus I plus G, X minus N. So 2017, I got 1000 billion. 2018, I got 1150 billion. Now these are nominal GDP values. I need to convert this into real GDP. How do I convert it into real GDP? This is the equation. So in 2017, the deflator is 100. So even if I put this into this equation and take, I will get the same value. That is why without doing that, I directly went and put real GDP is also 1000, right? But in 2018, they are saying the deflator has gone to 110. So now for 2018, I actually did the calculation. So for 2018, I put nominal GDP 1150, deflator 110, right? And I got an answer of 1045. That is the real GDP of 2018, right? So now what I did, right? I calculated the GDP growth, real GDP growth. Real GDP of 2018 is 1045. Real GDP of 2017 is 1000 divided by the real GDP of 2017,000 into 100. I get the real GDP growth rate. So you get 4.54%. How can we differentiate between nominal GDP and real GDP? Can't we assume that using the table in the question that we get the real GDP? No, because here in this question, they are directly saying, no, they are talking about a deflator. No? So they are saying in assume that the index for GDP deflator of this economy increased from 100 to 110 in the next year. So that means they have not yet deflated it. This is the nominal GDP value. Yes, I'm hoping you all understand why in the year 2017 that I've used the same figure. Yes, no. Why in 2017 the nominal GDP and the real GDP are equal? Because in 2017 the deflator is 100. So deflator 100 means that is the base year, guys, right? So even if you put it to the equation, you will still get 1000. That is why I didn't waste time and put to the equation, right? So this 1000, you put it into this equation, nominal GDP 1000 divided by, so 1000 divided by 100 multiplied by 100, you still get 1000, guys. That is the base year. So base year's nominal GDP, real GDP is the same. Okay, that is why I didn't do that. Okay, so the answer there is 5%. This is a good question, right? It covers a lot of areas, right? It's not a tough question, it's an easy question, but there's a lot of workings to do. Okay, so get a screenshot if you have to. Okay, someone wanted the previous question. This is the previous question. The answer was number 4. Okay, previous one. Okay, done with that, done with 21. So these, what you all can do is the same type of question, but if you want to, you can, change the values a little bit and you can practice a bit more, right? Okay, question 22. Okay, that's also a good question. The value of intermediate goods or intermediate consumption is not included in the calculation of GDP. Why do they not include it? Because they are consumed in the current year, because of tremendous difficulty in keeping track of all the intermediate goods, because they are only sold in the goods market, because to keep including goods that reduce society's welfare, to avoid counting their value twice. Exactly, guys. Intermediate consumption is removed from the calculation of GDP, because if you include it, there is a double counting error, right? That is why you are removing intermediate consumption. If any teacher who taught you this intermediate consumption and how you calculate gross value added, right, he or she would have told you that is there because of this double counting error, right? To avoid that double counting error only, you remove this intermediate consumption. So answer is number 5 there. Okay, the next question, question. Okay, no question in this paper. Okay, the 2019, the actual 2019 new syllabus paper. Okay, easy one. Come on, if you all can't answer this, I think there is a problem. I taught this very, very clearly in the first class last week. So, which phase of the business cycle is most likely to be characterized by an increasing positive output gap? Where you have a positive output gap. An increasing output gap is when you have a expansion, when the actual output is much more than the potential output. Number 3. Okay, easy one there. Then, okay, the next question. Which of the following is a component of gross value added at basic price? Okay, please put in your answer to this and give me 1 second. Okay, most of you all say answer number 1. Which the following is a component of gross value added? I've got 1, I've got 5. 5, okay, there are 5s also. Others? Okay, so when you take gross value added, what are the 2 approaches that you get gross value added? Now, you have input approach, sorry, not input. You have the income approach, you have the output approach, and you also have the expenditure approach. From which 2 approaches do we get gross value added? One way we can get gross value added is from the production or the output approach, right? Production slash, I'll say, output approach. Now, from the production approach, how do we get gross value added? So we take gross value of output minus intermediate consumption, we get gross value added. That is one way of getting gross value added. Another way of getting gross value added is using the income approach, right? The income approach also we get gross value added. So how do we get gross value added in the income approach? We add compensation of employees, we add gross operating surplus, we add mixed income can also be inside gross operating surplus, and we add other taxes on production. So there also you do this and you get gross value added. So gross value added, does it come under the expenditure approach? No, expenditure approach, there is no gross value added. We directly get gross domestic product. Okay. So in this intermediate consumption, is it a part of gross value added? No, it's removed from gross value added, right? It is not a part of gross value added. So not number 1. Number 2, change in inventories and stock, that comes under the expenditure approach. Expenditure approach, we don't talk about a gross value added. So not this. Number 3 says acquisition of valuables. This also comes under kind of the expenditure approach, not this. Taxes less subsidies. This is net indirect taxes. After gross value added only to go to GDP, we add net indirect taxes. We add net indirect taxes, then we get GDP. So is it inside GDP? No. Right? Sorry, inside GVA? No. Right? Number 5, that is the answer. Other taxes on production. This part here. Other taxes less subsidies on production. So under the income approach, when you're calculating gross value added, right, you take into consideration other taxes less subsidies on production. So go and check whatever tooth that you are studying, right, under the income approach, how do you calculate GDP, right? So first of all, you will go to GVA. When you're going to GVA, you will add those things, compensation of employees, gross operating surplus and things like that. Then you get GVA. Why won't the first come? Guys, the first one is removed. No, think which of the following is a component of gross value added? From gross value of output, you're removing intermediate consumption. It is not a part of gross value added. Just because it's in the calculation does not mean it's included, guys. Yeah, you're removing this. You're deducting because it's not a part of it, right? So that is that. Are we okay, Seth? Question 20 is number 5. Okay. Then we'll move on to the next question. Okay, this one I've taught you all before also. Which of the following household purchases, right? Household purchases will be counted as a component of gross private investment. Last class I told you there is a part of thing that households do that you included in investment, that you include inside investment. What is that? What households do, but you don't put it under consumption, you put it under investment. What is that? It is the newly constructed houses. Any construction that is done by households does not come under consumption activity, but it will be going under gross private investments or in investments, right? So sovereign bonds, share of companies will not even be included. Debentures also not included. Purchase of a car for new personal use, that will be included inside consumption, not under gross private investment, right? I explained that story last class. I did explain that. Oh, was it a different batch? You're all right. I didn't do national income to anyone else. I told you all that, right? Inside gross domestic capital formation, right? You put construction of houses also last class. 5 are saying yes, 1 is saying no. So I'll go with the majority of yeses. Okay. So that is 21. Okay. Done. Okay. 22. Right. Which the following is considered a property income? Now this is a kind of an uncommon question though, right? Which of this is property income? 1, 2, 3, 4, 5. Property. There is a this thing here, right? Now, if you look at it, when you now in general, when you say property income, you can even talk about like factor income kind of. So you can say 1 or 2. It can be both, right? But since they're going with the word property here, we'll think of, let's say, capital, right? So like what is the, which of the following is considered a property income? So for capital, the kind of return here is interest. So even wages, you can even say wages at times, right? Because that is the for the return for labor, right? But since they're saying since interest is also there, the better answer is interest, right? Employee contribution for EPF, non-life insurance claims, subsidy, those are not really property income. So property income is for any property that you own, the return that you get, right? So answer number 2 there, interest. Okay, that's all with that paper. Then we go into the last paper, the 2020 paper. 2020 paper, the questions were actually good. It was hard. In this part, the questions were actually kind of hard. Hard is not very, very hard, but it was kind of, challenging. The first one is easy though, but others, okay? Okay, difference between gross value of output and gross value added. Now I just showed that. What is the difference between gross value of output and gross value added? GVO and GVA. What do we deduct to go to GVA? Simple thing, right? So you get very, very simple questions like this. Guys, you will not get easier questions than this, right? Trust me, you will not get easier questions than this. Okay. So the difference between gross value of output and gross value added is number 2, intermediate consumption. So from gross value of output, if you minus intermediate consumption, you get gross value added. Okay. So, okay, then this one. This is also an easy one, but it's an interesting one. Which of the following activities is excluded from the production boundary, or in other words, not included in the GDP? Which of these will not be included in the GDP or excluded from the production boundary? services of unlicensed medical practitioners, services of owner occupied dwellings, goods produced by households, provisions of education free of charge by the government, caring for sick and old people by the members of the household. Guys, remember, right? Illegal activities. Okay, one question. Do we include illegal activities in the GDP or not? Is illegal activities included in the GDP? Is it included in the GDP? Guys, simple answer, yes, it is included. Yes, it is included, right? But the problem is you don't have data, right? You don't have information. So if you can get the information, right? If you can get information of about of the illegal activities that is there, you will include. But most of it is like, let's say you catch an illegal activity, let's say the government, you know, let's say catches any, let's say a heroin producer, or any, well, let's say a drug producer in Sri Lanka which is illegal, right? So it has some value addition, right? So it will be included in GDP. So if that fellow catches and you find a value, then you can put it in, right? But practical sense, that fellow hides it, no? So practically it will know, but theoretically, right, it is in the production boundary. If you can find data, you should include. But practically, right, practically data isn't available. No one will come and say I'm doing a illegal activity like this. So practical data isn't available, but ideally you have to include that in GDP because there is a productive activity taking place. So number one, services of unlicensed medical practitioner. Now this is an illegal thing to do, let's say to have your own dispensary or something, right? To become a medical practitioner, to become a doctor, you have to have the doctor's license. So unlicensed medical practitioner is illegal, but still it will be included in GDP if you can find the data. So they're asking what is excluded. So one is included. Services of own occupied dwellings is included. Remember, revision class students, when I taught you all, right? When I taught you all these, right? When I said the house that you live, right? If you're living in a rented house, right? They include that. Now there is an expenditure there, right? If you're living in a rented house, you all pay a monthly rent. No? Let's say you're paying a monthly rent of 20,000, right? So that rent will be included in GDP expenditure. But if you're living in your own house, right, then you don't pay any rent. But ideally, even that own house is kind of providing a service. There is a value. So what does the government do? Government says, okay, if this person has rented it out to someone, he could have earned this much, and they actually put a value for that, right? So services of own occupied dwellings, that is what we call it. If you are living in your own house, the government will estimate if this fellow's own house has been rented out, how much he could have earned. You put it in GDP, right? Then goods produced by households, yes, included in GDP, right? Any goods, let's say if you are growing vegetables or if you're doing anything, you do include. Provision of education free of charge by the government, yes, government expenditure included, right? Uh, online classes coming under gig economy, not really, not gig. Okay, caring for sick and old people by the members of household, this is not included, guys. This is a service by households for households, right? So own household services, right? Household own services, the services that households do for them, we don't include. Let's say, a mother cooking, looking after the children. Let's say they're looking after the older people in the family, mother cooking for the family. Let's say your father in let's say making a tap or repairing a tap that is there. Why you don't include this? Because you can't find a proper value, right? You can't estimate, you can't put a number to this, and it's impossible to collect data, right? How are you going to collect data and put a number to this? It's almost impossible. So own services, right? Own services provided by households for themselves will be excluded. So number 5 is not Number 2 is there, guys. Right? Are we okay there? Yes, no? Gig economy is a good question. It can be a question on your question number 10 in your A-level paper on the gig economy. Okay, so that is the answer there. Are the politicians' illegal activities including GDP? So that I don't really know. That is again, there is a, again, very subjective whether do they really. Ideally, if you have illegal activities, if you have data for it, you have to ideally include that. But I don't know if these illegal activities that politicians do, they include. I don't know. There was some reason there was thing on some sugar, right? I'm not that aware. I didn't go to the news. What was the story with sugar and stuff? There was some 15 billion or 15 million fraud there, right? Sugar importing something. I don't really know the story there. Okay, these two questions in this paper, the 2020 paper, right? These are kind of confusing. Imported when they reduce the price. Okay, I don't really know what happened. Okay. So there was a loss. Okay, so that even like the bond scam and things like that. Okay, right. Question number 21 and 22 is kind of, tricky. So the main components of primary income. What are the main components of primary income? 1, 2, 3, 4, 5. 2020 error. I'm getting answer number 5. I'm getting answer number 4. What do y'all think? 2020 errors. Compensation of, okay, so answers go as compensation of employees gross operating surplus, net taxes on production and imports, compensation of employees operating surplus, other net taxes on production, compensation gross operating surplus, mixed income, compensation operating surplus and fixed capital, gross operating surplus, and other net taxes on production. Okay, but here even I have a problem with this question, right? The marking scheme is saying answer number 1, right? Marking scheme is saying answer number 1, 2020, if I'm not mistaken. Anyone has a 2020 A-level marking scheme? Can you all check? If I, as far as I remember, I think the answer, it said number 1. Anyone? I think 2020 people are pretty on the group, right? Can you all just check? This is what the marking scheme is saying, right? Marking scheme is saying the main component of primary income are compensation of employees, gross operating surplus, and net other taxes. Okay, so one thing, right? I will agree with this. When they say primary income, right? Number 1, compensation of employees definitely has to be there, right? Should be there. On top of it, okay, so we'll look at primary income. So primary income, right? We need to have compensation of employees. That is for sure, right? And that is there in all the answers also, right? Then number 2 is, right, you need to have gross operating surplus. So inside gross operating surplus, right, you will have consumption of fixed capital. You will have, you will even have, let's say mixed income also. Remember I said mixed income, you can put it inside this as well. So mixed income will be a part inside this, right? And then the third component you will have, right, other taxes, right? So other net taxes, right? Other net taxes on production, right? That is how it is. So based on that, let's cancel out a few answers that is there, right? Question number 2 you can cancel off because it's saying operating surplus. So operating surplus, then they're talking about a net operating surplus there, right? Ideally it has to be gross operating surplus. So 2 cancelled off, right? Not number 3 as well. Mixed income is already inside this, right? So it's not number 3 also. Number 4 is saying operating surplus, fixed capital, not really. Then that means they are forgetting the taxes part, right? It's not this. Number 5, right? Compensation of employees, gross operating surplus, other net taxes on production. Number 1, compensation of employees, gross operating surplus, and net taxes on production and imports. I know my personal opinion is I think it should be number 5. So in the book Introduction to Economics, it has taxes less subsidies on both production and imports. Primary income, can you just okay? Let me check my tute. What have I given in my tute? Have I given this exactly? 2021 A level revision. In my tute, it's products and imports. Okay, so then it should be number 1. Goes with the marking scheme. Give me a second. Let me check with my tute. My tute, primary income, page 17. So nice to see you all know the pages also. Okay, page 17. Okay, okay. So yes, the primary income. Okay, I was confused with this one. So I was calculating on this. Okay, so imports will come. So when you're calculating primary income, it's this, right? So compensation of employees, operating surplus. Remember, I told you mixed income they don't have to give it separately. It can be a part of this. So you can say call this as gross operating surplus, and you can put mixed income inside this, right? And then you have the fourth component, net taxes on products and imports. So primary income, there is a little difference between primary income and this. So this is how you calculate this. Here you look at other taxes on products only, but here when you calculate primary income, you're also taking into consideration the taxes on imports. So remember, these are the components of primary income. You can put mixed income inside this and call it gross operating surplus. Gross operating surplus will have mixed income and will also have consumption of fixed capital. Both of that inside, you can put that, right? So then if you go look at the MCQ, yes, then answer number 1 makes more sense. So that is why they're going with answer number 1, compensation of employees, gross operating surplus, and net taxes on production and imports. If they asked you, how do you calculate, let's say, if the question was, how do you calculate GDP under the income approach, then number 5 would have been the answer. That would have been a better answer. But here, since they are not asking you they are not asking you GDP under income approach, no, they're asking you for primary income, right? That's a bit of a different concept. So primary income is this, and this. So here it's net tax on, okay, did I give production? But products, it's kind of same, unless they say other. Why are they including income here? Because they're including imports here. They're looking at primary income in the sense they're looking at income of compensation of employees. They're looking at the income of what people working. Gross operating surplus, they're looking at the income of businesses, and net taxes on production and imports, they're looking at the income of the government. That is why they're taking imports also here. Primary income. There's small difference between primary income and also the how do you calculate GDP under income approach. That's why I said this is a bit of a technical thing. Difference between primary income and property income. Yes, property income, not really. Property income is more like into this. Property income is something like the return you get for your factors of production kind of thing. That is like property income. Remember, we had a previous question, which one of this is property income, and the answer was interest, right? So that is property. Don't really try to confuse the two there. But anyway, this question is a little bit confusing. The correct answer is number 1. Just learn from these small questions. So when they say primary income, make sure that you have net taxes on production and imports also. Okay. If they have asked this question on how do you calculate GDP under, or how do you calculate gross value added under the income approach, then it would have been number 5. Okay, done. Moving on to the next question. Okay, even this question is a good one. I've explained this before, but it's a good thinking question. Personal income exceeded national income in a particular year. It can be concluded that. Okay, so how do you now, when they say, usually when they say national income, they're referring to gross national income, right? So from gross national income, how do you go to personal income? So to go from gross national income to personal income, you add all the income received by households, right? So income received by households, you add, right? So things like, let's say, transfers, right? All of that you add. So mainly those are like transfers. And then what do you minus? You minus the income not received by households. Revision class students, the equation, detailed one, is there at the back of your tute. Income not received by households, right? You minus these. So income not received by households, you have, let's say, for example, retained profits, right? Retained profits is a part of this, but not included there, right? So then social security contribution, right? The EPF and ETF these people pay, right? So I'll say SSC, social security contribution, right? Let's say corporate tax, right? Taxes that businesses pay, households don't get, no, right? Things like that. Retained profits, in other words, is undistributed profits, right? Things like that. So they're asking you, right? They're asking you in a year if personal income exceeded national income. So let's say if personal income is, let's say, 1,500, national income is only 1,000. They're asking you how can that happen. So let's say this is 1,000. We don't talk about indirect tax here because this is the expenditure approach, no. So here we don't really look at okay, no, indirect taxes, no, indirect taxes is not really inside this. We don't consider indirect taxes. We can consider direct taxes if you want. That is personal income to go to disposable personal income. Okay, right. So how can this happen? They're asking you if personal income exceeded national income in a particular year. So how can personal income be more than national income in a particular year? How can that happen? So whatever you add, right? If let's say you added 800 and you minused only 300, right? You added 800 and you just deducted 300. So then it can happen, right? So how can the personal income be more than the national income is if this part, the income received by households, is greater than the income not received, the corporate taxes and these things. So which of these answers suggests that? 1, 2, 3, 4, or 5? Read and see. Take a minute. Yeah, so it's answer number 1 that gives the correct answer. The amount of transfer payments, that is this, the income received by the transfers and all of those pensions and everything, some of the benefits, transfers for unemployed, all of that transfer payments exceeded the sum of social security contribution, let's say corporate income taxes, undistributed profits. So if this exceeds, so in my example also, this 800, this is only 300. So if this is more than this, you can say that the personal income will exceed the gross national income. It's a tricky question, but it's a good question. Now these type of questions you can learn a lot of things, right? Rather than having an easy question. So answer there is number 1. We'll see if the other answers, if they say anything. Sum of social security contribution, corporate tax, and undistributed profit exceed transfer payment. So if this is more, then the personal income will be less, right? So not number 2. The sum of social security contribution and corporate income taxes exceed indirect taxes. We don't even consider indirect taxes here, not needed. right? The amount of transfer payment exceed the social security contribution, corporate income tax, indirect tax not taken into consideration. Sum of corporate income taxes and indirect tax, again, indirect taxes you don't need. So answer is number 1 there, 22. It's a good question that you can learn from. So get a screenshot. Oh, hope if you all have copied things down, right? Think about it. Go through your tute, go through whatever equation, revision class students, it's there at the back of your tute. You all know which page towards the end. Output, is that now? This one, household income, that is, guys, household income is personal income. So how do you go from gross national income to household income? You add the household transfer receipts, that is the income received by households, pension, social security, interest payments, all of that. You minus the interest income not received, retained profits, corporate income tax, social security contribution, depreciation, right? You minus all of that, then you get household income. From household income, if you minus the household personal income taxes and direct taxes, you get disposable income. So they're asking you, how can this household income or personal income value be greater than the gross national income, the national income? How can this be greater? This can be greater if the transfer payments are much greater than this one. So then this amount household income can be greater. That is the logic behind that question. It's a good question, right? So please do go through. Are we okay there? Yes, no? Question 22. Shape. Okay. Right. 22. And yeah, done with this. Okay. Can someone, whoever who did all the questions, can you all tell me how much you all get out of how much? All the questions from 2011 to, so I'll have done and marked. So we did all the MCQs from 2011 to, how many total questions can you all tell me? Okay. So total questions here. Okay. Let me count. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 42. 22 was a little hard, I'll agree. 40, okay, I'm lazy to count. The total question is 42. So how much do you all get out of the 42? So I can at least, let's say, hit a 30. I think that's a good number. More than 25 or 30 is a good number. And as long as you all learned from where you all are wrong. Trust me, guys, this is not a hard unit. I don't know why, for some reason, students, think that this is a hard unit. This is not. If you know the unit properly, you can do it. There is this, I don't know, conception that people put in your head, saying that this is a hard unit, this is something like that, right? If you actually look at it in your A-level paper, even this, now we'll do the essay questions, right? Even the essay questions are very direct. There is a calculation, there is a small thing on bit of theory, that is actually very, very direct. Okay, I'm saying you might not be able to score 20 out of 20, but at least a 16 or a 18 is definitely possible, right? So my recommendation is, don't leave this unit now itself. Now that you all have, now that A levels is kind of pushed back as well, right? My best thing is, study these units also, study national income and even macroeconomic equilibrium to answer the, but let's say question number 5 in your part 2, because then at the day of A levels, you have a choice of, from 5 questions, you have to do only 3 then. So you can properly, plan it out and do it then. So explain question number 22 of 2018. What is 22 of 2018? Give me a second. This one. 22. This one, GDP. So GDP definition is a simple one. You simply go with what is given in your book. Right? So what is GDP? GDP is the value of final goods and services produced in the country. We are not talking about goods and I just went one step ahead and showed you why the fourth one is wrong, because only North economy is different. So GDP definition is the value of total. They're asking you which statements defines GDP. So which statement defines GDP? It's the total market value of all the goods and services produced in the country. That is why it's answer number 3. If you have not understood this fourth one, leave it. That's okay. Calculations, do we assume mixed income is already included in gross operating surplus? Yes. If you are doing a calculation, yes, assume it's included inside gross operating surplus. Okay, shall we go on to the part 2 questions? Guys, have you all attempted the part 2 questions? No? Yes, no? Part 2, I wanted you all to do. How many of you all did? Starting from 2011. 2011 onwards, guys, the old papers, you have one entire essay question, 120 mark question, right? But now in the latest paper, now if you look at the earlier format, right, earlier A-level paper format, unit number 1, you get question number 1. From unit number 2 and 3 only, you get question number 2. From unit number 3, you get, unit number 4. From production, you get question number 3. National income, you get question number 4 in the old papers. So in the old papers, until some it can change in some years, right? But mainly question number 4 is from national income accounting, right? Okay, and also there are some of these questions might be a little bit of a old syllabus, but as far as we can, we'll try and answer these questions. Or do you all want to finish early? What do you want to do? Do you all want to discuss? We have half an hour to go. Have you all done? No? Okay, can you all genuinely tell me how many of you all did from the 72, 71 of you all? How many of you all did? Okay, 1, 2, 3, 4, 4 people. Okay, only 2011 and 12. Okay, so we'll discuss, let's say, 2 papers, right? We'll discuss 2 papers quick, and then we'll go off. Because in vain, no, otherwise, because we canceled the class 1 week last month also, right? Okay, so 2011. What categories of income are included in the income approach? Now, this is a old syllabus thing, right? So earlier national income was calculated a bit differently. So if you look at the answer there, they would say a different thing. But ideally now under the income approach, what do we have? I've told this like 100 times now. Okay, so I'll just copy and paste whatever answer that comes. Okay, so you have these kind of things now under the income approach. Your compensation of employees, you can say gross operating surplus. Inside that, if you want, you can say next income, and you can also say other taxes, right? Other taxes on production, other taxes less subsidies on production, right? So you can say that. Okay, so those are the ones included in the income approach when calculating GDP. Question number 1, right? Okay, question number 2, can't we write sources of income? Sources of income in the sense rent, wages, interest, profits. That is the so if you're going with rent, wages, interest, profit, that is how we calculated this earlier before. So remember I said this national income accounting, this lesson has changed kind of. No, don't go with rental income, corporate profits and stuff like that. Old syllabus, yes, that would be the answer probably in your past paper book. But now, currently in the 2021 paper that you are doing, if they give you a question saying what are the incomes included in the income approach, you have to go with this, right? Not rental income, that because that was how it was calculated before. Okay. Okay. So then how does the problem of double counting arise in GDP? How it is corrected? Guys, do you all know the double counting error? Yes, no? What is the double counting error? Simple things. Okay. So double counting error is this, right? I'll explain for those who are kind of lost, right? Double counting error, right? You have double counting error is where now let's say you have a fellow, right? You have a person producing cotton, right? So let's say a cotton producer, right? Let's say he grows cotton and no, not grows cotton. Cotton comes in trees, yeah. Guys, cotton is from trees or cotton is from sheep? I'm also confused now. Do you have cotton trees? Or is it entirely from sheep? I remember the back in the time I was growing, I was playing Farmville. Anyone, guys, did your generation play these Facebook games of Farmville, Bun Buddy, and stuff like that? No? Facebook games? There are games on Facebook. You all played? No? Okay, so I remember back in the day, I played, and then I remember there is like a cotton tree in that. So it's like a farming game. That is why I even created my Facebook account to play those games. Okay, so let's say you have this, right? So let's say there is a cotton producer, right? So let's say he produces cotton worth okay, so he produces cotton worth 1,000 rupees, right? So he produces cotton worth 1,000 rupees. He sells it to this guy. He sells it to, a let's say a cloth producer who is producing now fabric. This cotton guy is selling his this thing to a cloth producer. Now the cloth producer, he's buying this cotton for 1,000 rupees from the cotton guy. He's putting into the machine and doing different things. And let's say he's producing cloth and he's selling that cloth for 3,000. He's selling that cloth for 3,000. Now this cloth guy, right? He's selling it to, let's say, a fellow making t-shirts, right? So let's say a t-shirt manufacturer, right? A t-shirt manufacturer. Okay. Now this t-shirt manufacturer, he's getting the cloth of 3,000, right? So he's doing some different, he's cutting it and sewing it and doing all of that. And let's say he's making t-shirts worth 10,000, right? And then let's say he's selling it to the final customer. So now if you look at it, when you calculate GDP, if I take, now I can say cotton producer is saying, I produced the output worth 1,000 rupees. Cloth fellow is saying, okay, I produced the output worth 3,000. T-shirt fellow is saying, yes, I also produced the output worth 10,000. So if you add all these three together, right, can you say that the GDP is, right, that the GDP of this economy is 14,000? Is that correct or wrong? If I say GDP is the output, right? So he is producing 1,000, he is producing 3,000, he is producing 10,000. No one is lying here. Everyone is telling the truth. But this is wrong. Why is this wrong? Because here you need to take into consideration that when this fellow produced a 3,000 worth of output, right? He produced a 3,000 worth of output by getting 1,000 rupees of this guy, by getting a cotton from this fellow. So this person's cotton is inside this cloth. So you have to remove that. So this, now let's say this person is not buying anything, he's simply growing the tree, or let's say getting it from the sheep. But the cloth producer, this 3,000 is his gross value of output, GVO. So you have to minus the 1,000 that he's getting from the others. So when you minus the 1,000, his actual value addition is only 2,000. This t-shirt guy, yes, he is producing an output of 10,000, but to produce that output of 10,000, he is buying cloth of 3,000. So this 3,000 is already inside the 10,000. If you add it two times, it's wrong. That is what we call a double counting error, where one output, this cotton thing is already inside this cloth thing is already inside this. So if you add both of it, it's wrong. The double counting error comes. So what you have to do in order to avoid this double counting error, so that is what the double counting error is, right? So double counting error is where, right, when you add all the output, right, when you add all the output, yes, exactly, this is the intermediate input. This 1,000 is the intermediate input. You have to deduct. This 3,000 is the intermediate input of this firm. So how do you avoid this double counting error, right? You only take the gross value added. So one way of avoiding is you only take the gross value. The cotton producer, he does not have any intermediate input. He's simply, let's say he's getting the seeds for free. So he's simply getting 1,000. Cloth guy, what is his gross value added? GVA is how much? Cloth fellow, it's 2,000, right? How much is it for the t-shirt producer? T-shirt producer's gross value added is 7,000. So now if you add all of these together, you will get the correct GDP. So that is how you can avoid this. There are two ways of avoiding this. Is just simply one way. You add all these together. The correct GDP value is not 14,000. It has to be 10,000. So you have now removed the double counting error. So they're asking you in this question, how does the problem of double counting arise? The problem of double counting arises when you add all the outputs, right? When you add everything, you get the problem because this person's one is already inside this. So how can you avoid it? How is it corrected? It is corrected. One way of correcting it is by getting only the gross value added. Of everyone, you just get the gross value added. So when you get the gross value added of everyone, then you can correct it. What is the other way? Other way of correcting it? Other way of correcting it? The other way of correcting it, guys, is simply ignoring all the intermediate products and you take only the value of the final product. So final product, can you see? The t-shirt here is 10,000. You simply ignore the cotton and the cloth and everything. You simply take the final value of the t-shirt. So final value of t-shirt is also 10,000. When you use the gross value added also, you still get 10,000, right? So that is the way of correcting it. So they're asking you to explain this using example. So you can give any example like this and you can explain that story. Okay, so just look at the marking scheme. I think they have a good answer for that. In exam, writing more is good for 4 marks question. Yeah, so as long as you are writing sense, it's good to write more. Unless you are writing crap. Okay, that is that. Okay, so then question number 3, sums. These sums are interesting, right? So first one they're asking, following is the information from the national accounts of a hypothetical open economy. Assume all taxes are direct taxes and there are no subsidies. So all the taxes are direct. They have given GDP, they have given gross investment, net investment, private consumption, government purchases, government budget. First of all, they're asking you net domestic product. How do you get net domestic product? They have given you gross domestic product. It's GDP minus consumption of fixed capital that we know. Okay, so part A, to get net domestic product is equal to GDP minus consumption of fixed capital. Now they have not given you consumption of fixed capital. GDP they have given. They have given GDP is 6,000. So how do you calculate consumption of fixed capital now? Where do you get that answer from? They have not given. Have they given? No, right? They have not given. So how do you get this thing, guys? It's your gross investment, right? You know, gross investment, right? Minus the consumption of, okay, so I'll put it here, gross investment minus consumption of fixed capital, you get net investment, right? So they have given you gross investment, 800 they have given. CFC, you don't know, you have to find that. Net investment also they have given as 200. Can you tell me how much is consumption of fixed capital then? CFC is equal to how much? Let's work the equation. Simple thing, it's 600, right? Sorry, this is not 8,000, guys. Sorry, it's 800, right? So 800, so then just be 600. So then our CFC is 600. So GDP minus consumption of fixed capital, you get net domestic product of 7,400. That is how you do that calculation. Part A. Are we okay with that step? Yeah. Sorry. 5,400. Okay. Are we okay there? Okay. Right. Then part 2, net exports. How do you get net exports? Net exports, they're asking for net exports here. So you know, right, in the expenditure approach, GDP is equal to, right, net exports is X minus M, but do we have answers here? GDP is equal to C plus I plus G plus net exports. So GDP they have given 6,000. Consumption they have said private consumption is 4,000. Investment, okay. Investment, what do you take? Do you take gross investment or do you take net investment? There. For investment, do we take gross or net? Yes, remember we take gross investment. We take the investment with consumption of fixed capital. So gross investment 800, government spending 1,100. So can you calculate net exports then? Easy calculation. Can I have an answer? So move net exports to the other side. You will get. Just check whether it's a positive answer or a negative answer or whatever that is. So net exports, CFC is depreciation, consumption of fixed capital. Okay, so net exports there is how much? 100. Simple calculation. Done. Part 2, net taxes. How do you find net taxes? That's a good question. You go with the government budget. Have you seen government budget surplus here? So they have said government budget surplus. How do you calculate the government budget balance? Government budget, right? How do you calculate? It's the taxes that they get minus the spending, right? Minus the government spending. So government budget, they are saying there is a surplus of 30, a positive 30. So taxes, we don't know. We need to find that, right? Government spending, they have told us it is how much? In the question, they are told it's 1,100. So can you move it around? And can you tell me how much is taxes now? Taxes is equal to 1,130. So yes, this has to click you. When they say that is net taxes, you need to click, they have given government budget, that is where I get. After it clicks you, it's a very easy sum. But that clicking has to happen. It needs to come into your head. That will come into your head with practice only. No matter how much you have studied, it will not really come in. But now you have done this. Now when you know, now you have done this question, right? When they have given net taxes and government budget and stuff, this is how you do it. Now, next time you get a question like this, it will immediately click you. That has to happen. Because if that does not click you, you can't. You will think about 1 hour how to find this, right? Okay, D, disposable personal income. How do you get disposable personal income? So you simply get national income here. You can get NDP. Sorry, it's 1,050 there. No, 1,050. Which one is 1,050? This one is 1,100. Count budget surplus, they're saying it's 30. So you take the 1,100 that side, it becomes 1,130. It can't be 1,050. So you simply solve this, you take the 100 into this side. So 1,100 plus 30 then, 1,130. Okay. Then, okay, third part again, right? So they're asking you for net taxes. No, they're asking you for taxes. So you know, how do you calculate government budget balance? Comes from unit number 8. How do you calculate government budget balance? It's the government's income minus the government's expenditure. So income is taxes, expenditure is what they are spending. So in the question, they have said government budget surplus is 30. They have a positive 30 budget balance. Taxes are what you have to find. Government spending, in the question, they have said government purchase 1,100. So I'm putting 1,001. So now I'm working it around and I'm calculating taxes. 1,130. Okay, that is that. Then question number, okay, A done, B done, C done. D is a good one. Disposable personal income. So how do you get disposable personal income? Okay, so disposable personal income, ideally, right, you have to get the first you get the national income, right? So here, uh, disposable personal income, okay, it's household income minus the taxes, okay, but here now they're not showing you a difference now that it's ideally household income minus tax. How do you calculate household income? Remember I showed you before, household income is your gross national income plus those transfers minus those whatever things that they are not getting. So in this question, right, have they talked about transfers? Have they talked about pensions? Have they talked about corporate profits, dividends? Nothing, right? There's nothing. So therefore you can assume that the gross domestic, right, the net domestic income that they have given here, right? Now remember here, since this is a 2011 paper, right? That is why you have a calculation like this. In the new paper, you will not have a calculation like this. So don't worry, right? So here what they have done, what they will ideally do is they will take the net domestic product, what you had in unit, what you calculated in question number 1, that one minus the taxes. So net domestic product is 5,400 minus the taxes 1,130, because they are saying all the taxes are direct taxes. Assume that all taxes are direct taxes. So when you do that, you will get the personal income. So remember, ideally, in now if it was a new question, it will not be based on net domestic product, it will be based on gross national income, right? So since this is a 2011 paper, this is kind of an old, yeah, the method of calculating GDP changed, right? In somewhere around 2015, 2016, this method kind of changed. So that is why we don't take this into consideration. Okay, so but we'll go with this answer. You get 4 to 70. Even if you didn't get it, just leave it, right? Okay, how do you get personal savings? Now that is a question that you can do. How do you get personal savings? How do you calculate savings? Personal savings is equal to, it's your disposable income, right? Your YD minus your consumption. No? So disposable personal income you calculate in the previous sum, that is 4 to 70. Go and check in your this thing how much is consumption. Consumption is 4,000, right? So from you got a disposable income of 4 to 70, you consumed 4,000, then how much is left? You have 270 as savings. So that would be the answer. That is a question relevant to your year as well. So that's a good calculation sum, right? So ideally what you all can do is go through this calculation sum again, right? Guys, remember these sums, right? You will only get done through practice, right? The more you practice, the more easier the sums you get. And this same kind of sum, they can put it into an MCQ also. In a MCQ, they can give you all 5 of this, and the MCQ, they can ask you what is personal savings. They will not ask you all 5. They can simply ask you one of this. So same question can be converted into a MCQ. So anyone, even if you're planning to leave the question, remember these sums are important because you simply can take the same numbers, convert that into an MCQ, right? MCQ questions, you can take it, you can convert it into an essay question. So please, 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 whether you are planning to do it or not, practice the sums, right? Because that is very, very important. Are we okay there, Shep? Yes, no? A, B, C, and D. Okay. So we'll do the last question and then wrap things for today. Okay. So question number 4 of this, again, a common question that comes from national income accounting. Why do you do this? Why do you calculate national income data? The usefulness of compiling national income statistics. So simple things you can say to calculate economic growth. Remember using GDP now you calculate economic growth. So one is to calculate economic growth. Then number 2, you can say to, let's say, yeah, see how the economy is performing, right? To evaluate economic performance, right? to compare with, let's say, other countries, right? To see how we have been doing compared to other countries, right? Then also you can say yes, to estimate per capita GDP, right? Using national income data, you can calculate per capita GDP, right? What else can you talk about? You can talk about that these things can be used to, let's say, formulate economic policies, right? For example, fiscal policy, monetary policy, right? Based on this data, you can form those kind of things, right? uh okay, to find out the resource stock and resource utilization, yes. So all of that is a pure theory part, right? So 5 points, right? You can't state the 5 points, they're asking you to explain, so you put that in a paragraph, right? That is what you ideally have to do. Okay, that's a easy one. Okay, can I explain disposable income? So disposable income is the actual income that you get to your hand, right? So from your income, right, even though your salary says 100,000, right, you will have some sort of an income tax. So let's say there's an income tax of 20,000. So actually that you get to your hand to spend is only 80,000. So that 80,000 is what we call disposable income. Yes, it is a spendable income, exactly, right? How much of income you actually get to your hand, which you can spend. Okay, so we'll wrap things up. We'll not do the 2012. We'll do that the next class, right? Guys, now I want you all to do this, right? Please study the unit and come. I'm not teaching the unit here, right? I'm just revising and helping you all do the questions. So this is not a class that I teach you unit number 5, because if you're blank with unit number 5, these questions or what I'm explaining will also be Greek, right? So to make use of this program, right, to make use of these 2 hours, please, one, study the unit, and number two, do the questions and come. It's not your time just to listen to me. It's your time to go through what you have written, see how you have understand, and see does it match with what I am explaining. Only then it would make sense, right? So any let's say even I don't any friends or anyone who has joined newly or anyone, right, just tell them as well, right, to go through the unit, do the questions and come, right? This is not a theory class, this is not a revision class, this is simply where we discuss papers. So I'm not teaching units, I'm just recalling things and trying to help you apply that into a paper. Okay, so that is where we will stop for today, right? We'll start from 2012 tomorrow. So tomorrow, not tomorrow, next week. So ideally do all the essay questions from 2012 to 2020 and come. Since GDP equals GNI, why should we take the NNI? I didn't get that. Are you referring to a question here or referring to something else? Okay, so I'll end the recording here. If you have any questions, you all can stay and clarify. So see you guys. See you next week. Welcome. Bye.